Today we are going to take a deep dive into the man who pioneered the concept of ESG, Larry Fink. Larry Fink is the CEO of BlackRock, the world's largest investment management firm. Larry Fink and seven others started BlackRock in 1988, a $10 trillion asset under management company, more than any country in the world except for two, Iran, China, and USA. In 1999, he took the company public, and as of today, they had a 10,000 return. If you had a share of BlackRock then, today it would have gone up to 7,000%. But right now, the concept of ESG is being weaponized. Trump tried to get close to him in 2020. Steve Schwarzman said good things about him when they parted ways. Elon Musk on January 20th, 2023 tweeted the word S in ESG stands for satanic. Having seen that, let's learn more about this guy Larry Fink and BlackRock. So if you haven't hit that like and subscribe button, hit it. Larry Fink majored in political science, graduated with BA with bachelor's from UCLA. Originally wanted to get into politics and make an impact, but decided to get into finance. Fink started his career in 1976 at First Boston, a New York-based investment bank, where was one of the first mortgage-backed security traders, very new at the time compared to equity trading, and eventually managed the firm's bond department. At First Boston, Fink was a member of the management committee, a managing director and co-head of the taxable fixed income division. He also started the financial futures and options department and headed the mortgage and real estate products group. Exists as a bond trader at First Boston, becomes responsible for roughly $1 billion to the bank's bottom line. Wow. Then he loses $100 million due to his incorrect prediction of interest rates. Eliminated. Quits First Boston, spent the next 18 months thinking about what next to do. However, this experience with trading market-backed securities would later become an emphasis for his next move, learning how to manage risk in investing clients' money. Fink then needed money to start his own business. He originally sought funding from Peter Peterson of the Blackstone Group, who believed in Fink's vision of a firm devoted to risk management. Peterson called it Blackstone Financial Management. Fink then teams up with Steven Schwarzman from Blackstone, makes a good impression. Then they started a joint venture called BlackRock Financial Management in 1988. In exchange for a 50% stake in the bond business, Blackstone initially gave Fink and his team a $5 million credit line. Within months, the business had turned profitable. The percentage of the stake owned by Blackstone also fell to 40%, compared to Fink's 60%, fixed staff 60%. They started making money in 2 weeks. In 1989, Fink had $8 billion in assets under management just a year later. At this time, Fink became obsessed with risk management and was a pioneer in using statistical modeling and algorithms in trading bonds. By 1994, BlackRock was managing $53 billion in assets under management. In 1998, after 10 years, he split from Blackstone to make BlackRock independent because he and Schwarzman had disputes over methods of compensation and equity. Fink proposes sharing the company's shares to newer hires to nail Tanners from back, and Steven Schwarzman didn't want to further lower their stake. PNC buys Blackstone, so BlackRock becomes independent with Larry Fink as its chairman and CEO. So PNC ends up buying Blackstone, so Blackstone shares in BlackRock, so they become independent with Larry Fink as its chairman and CEO. In 1999, he took BlackRock public for a record of $377 million at $14 a share. BlackRock spent years developing its risk management software Aladdin, which launched in 1999, starts offering Aladdin software to clients around the world. Then they acquired Merrill Lynch Investment Management, expanding its retail and international presence. Then the 2008 financial crisis comes.
Great Depression struck the world.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil prices so fast.
The most serious recession in decades. And that means life, as most Americans know it, is about to change.
The U.S. government contracted BlackRock to aid its recovery after the financial crisis of 2008, caused by the mortgage-backed security under the subprime loans, and restructuring the debts owing by too big to fail banks. Even then, Diamond called on Larry Fink to ask for his advice when the government asked him to buy BS10s. Now at this point, they were managing a $1.8 trillion, and now 17 years later, they were managing $10 trillion in assets under management. After that, he thought of what next to do, and he sees ETF as the next thing to do. Today, they own 35% of all ETF market is with BlackRock. Fast forward to 2020, during COVID, during the economic distress, the Federal Reserve, came knocking on BlackRock's door to help purchase corporate bonds ETF on the central bank's behalf. Also help with purchasing bond ETF, which BlackRock offers through its iShares platform, and also help with purchasing distressed securities, increasing restructuring toxic debt, because it isn't a main skill set of the central bank to do. So what does Fink BlackRock get in this deal? A $48 million per year for possession on the behalf of the Fed, unlimited social credit, number 3 power, and number 4 influence. A deal that will later help Larry Fink impose his ideas of ESG on companies around the world. However, in his annual letter to shareholders on October 20, he said a fundamental reshaping of global capitalism is underway, and that his firm would help lead by making it easier to invest in companies with favorable environmental and social practices. However, Fink has been largely focal on companies taking action on climate change, and in an open letter in 2022, he stated every company and every industry will be transformed by the transition to a net zero world. The question is, will you be led, or will you lead? In 2022, Fink was named one of the US top climate villains by The Guardian due to BlackRock profiting from deforestation. And finally, Larry Fink on Bitcoin. He has always been once a critic of Bitcoin. He even said in 2017 that Bitcoin serves as a medium of money laundering on Bloomberg and CNBC. Then suddenly in June 2015,
so he bashes Bitcoin.
In June 15 of last year, he announced that his firm BlackRock is applying for a spot Bitcoin ETF. And of course, they own majority of the share of the ETF company. And what happened next? It ended up getting approved. BlackRock's IBIT, which later ended up getting approved by the SEC, also now he sees a future with it, as he has said on the CNBC interview. Bitcoin is a legitimate financial asset that everybody should hold. Wow. This comes as the asset manager on Monday posted better than expected second quarter earnings. BlackRock's iShares Bitcoin Trust (IBIT) added $4 billion in assets during the quarter, and now worth $18 billion due to inflows. That is it from here today. We hope you enjoyed this video and learned more about Larry Fink, the most powerful man in finance, better than you came. Don't forget to hit that like and subscribe button and turn on the notification bell. See you next time, next week. Bye from here. Peace.